Hello again, Rishi Patel, co-founder, Master of the Markets, the Elite Traders Conference, Traders Open Day. Welcome to this tutorial on the Elite Traders Portal Trade Journal template. So this is the basic trade journal which we have issued already with access to the Trade Like a Master video series. And although it's a basic trade journal, it is actually got quite a lot of great material inside it, which we thought would be worth reviewing in a level of depth. So in the journal, if you actually have a look, on the initial tab, you've got how to use this journal. And actually that's going to describe in a lot more detail than what I'm going to do in this video, actually all of the different elements of this actual journal. If you look, it starts from the far left with trade number. Obviously we log our trade numbers 1, 2, 3, 4, 5, so on. It's important that we do that so that we can quickly track how many trades we've taken on a given strategy for a set period of time. So that's pretty important. So put in the trade number, then the currency or the stock or whatever the instrument that it is you're trading can go under the epic code. The fill date is the date we actually entered the trade. Not for example, if you're trading a swing system and you're using pending orders to open on the market, it's not the date that you actually placed a pending order, but the date that you actually were entered into the market. Whereas the exit date also is the date that you actually were closed out of the trade, either on the initial stop, the trailing stop, or the profit target. So whichever one of those were hit, the date on which that actually happened. Now this is whether you're going long or short in the market. Here you've got to understand obviously the direction that you actually took the trade, so you can log that as well. Now it's important that these columns get logged accurately, because what's going to happen is we're having a calculation taking place in these columns over here according to what's being put into here. So for example, the pips risk column is looking out for here the profit and loss is looking out for whether we were short or long. So for example, it knows how to calculate the profit and loss that was incurred in terms of pips because this trade was long. If we had however put short in here, then it would have calculated that as a 200 pip loss on the other hand. So this is quite key to make sure that it's filled in correctly. Also the dates also need to be put into in a certain format as well. So use the format all the way throughout, because this is how the template has been built. The entry reasons here, you can put in some commentary about why you actually entered the trade. So if you're entering, and obviously this example is using a dynamic breakout, if you're entering using the dynamic breakout strategy from the Master Markets live trading room, then of course you would be putting in things like higher highs, higher lows, price structural failure, the fact it was variation 1, and whatever other comments you needed to add in. The actual fill is the entry level that you actually got into the market. It's important that you put in the level that you were actually filled into the market, not your projected level. So sometimes you're going to get slipped, sometimes you may get slightly later entry. This is all important to understand. So you need to put in the actual level that you were filled. Then you've got your stop loss. So your stop loss is going to be the level at which you exit the trade for a loss. And this is your initial stop loss, so do note that. Now if you trail the stop loss, I'm going to show you what to do that with that in a while. But this is your initial stop loss that you're going to put into this box just here. And then of course the profit target. So the profit target in this case is 2 times the trade risk. So we've put in 130-100 into the example. Then what happens is these boxes in blue have all formulas inside them, so don't delete them. They're going to calculate values for you automatically. So in this case it's calculated there's 100 pips of risk and there's 200 pips worth of upside profit. Then you've got the exit price column. So the exit price column of course is the level at which you've exited the market. Now that could be again on the initial stop, the trailing stop, or the take profit. So whichever level you exited the market, you're going to enter that information into there. Then you'll automatically be able to calculate how many pips of profit you actually made. Also the percentage profit or loss you've made. Taking into account if you've risked 1%, then this was actually calculate that you've actually made 2% return on this trade. Obviously if you'd risked 2%, then this, you'd become 4% automatically and accordingly. So you can vary that pretty easily. The next column actually tells you your actual profit and loss. So the difference between the two is what you expected to get and what you actually got. So for example, in this trade we expected to get 200 pips, but let's say we only resulted in getting 150 pips worth of profit. Our actual profit and loss was 1.5 to 1, whereas the expected was 2 to 1, which means that there was a very different actual profit to loss ratio than what you were actually expecting in terms of a profit and loss. And it's important to understand that in your strategy, especially 20 trades down the line, you can measure how many of these are actually reaching your target. Then you can start to ask yourself, is the target actually realistic? So this journal is actually going to log quite a bit of information for you, so it's pretty important to understand. And then if you move along, you've got two boxes here: performance score and execution scoring. So these are optional fields, you don't necessarily have to use them, but we've included them here because they are useful indicators. So the performance scoring, you can see here, it depends on what actually happened with the actual trade, what the outcome of the trade was. So either it hit target, which is 5 points, you're out at a different price from the target, but the trade was still profitable. So you're out maybe on a trailing stop, or you're out, you exited the market above the entry level, so you were still profitable, and you are out for that, so that would be a 4-point scoring on the performance score. Out at break even would be 3 points. You're out at a different price, but you didn't hit the initial stop loss, so it didn't have a complete losing trade, is 2, and if it hit the initial stop loss, then 1. And of course, this can help you to quickly measure, is your system taking lots of hits on the initial stop? And if it is, then you know that's something you need to revise with the stop. Is your system taking yourself out at lots of 4s? Are you getting an average of between 3 and 4, or a 3.5 average? If you are, then you know that there's potential to revise your target as well. So this will tell you quite a lot. If you can measure it consistently, the key is over 20 trades, again minimum, it will give you quite a bit of information. You've also got some execution scoring here as well. This can be very good for you personally, to be able to actually in a quantified way review and assess your performance in the market. So for example, you can see here my execution scoring. You can see from the execution scoring, I've got followed trade as dictated in your plan, would give you 5 points. So that means you took the trade, you done it exactly in line with your plan. Whether it was a profit or a loss doesn't matter, but if you did it according to your plan, you take 5 points. Now if you followed the trade entry but closed the position before predetermined target, 4 points. If you follow the trade entry but you removed your stop, or you let your position run past its original target, basically you didn't follow your plan in the way that you wanted to, 3 points. Enter the setup late and didn't set a target is 2 points. I don't expect this will happen much time. And impulse trades, everyone has these in their trading career. They normally wean their way out further on in your trading career, but in the beginning this can be normal, and you should track it, because when you track it you become aware of it, and this is really key as a trader. So do track. If you're taking impulse trades, you need to know about these, and if you track it on execution scoring, then it can give you a lot of feedback later on. Finally, you've got a comments field, and that comments field can be used for absolutely anything that you want to comment on the trade. So was it something that you felt you shouldn't have taken? Was it something that was in line with your plan? Was it perfectly done? Whatever it is you want to log about the trade. Is there some common pattern that's occurring that you're seeing on a repetitive basis? You may want to log that so you can review it later. So that is the base trade journal. You can see there we've filled out a sample trade for you as well. Just put in the name of your strategy on any of these tabs and you're able to use it on any instrument, any market, any time frame. This journal is pretty universal. It will also add up for you your total in terms of profit or loss, in terms of percentage. So and you can modify that, of course, if you want to modify, or if you want to monitor your profit and loss in terms of pips. It can also measure that for you as well. So that's the Master of the Markets basic trade journal, and you can use this to get yourself going. There is, of course, a more advanced trade journal as well. You can check out that module. That is the one we use to log our own personal trades, is the advanced trade journal. Have a look at that tutorial video as well. See which journal you'd like to use, which fits your requirements the best.